And we started with you in August, right, Mark?
We actually started working together in June of last year.
Yeah, it was a while.
Yep.
Um, so that was 800K or 700K?
Um, Close to 800, a little under 800 actually.
Yeah, so cool thing is Mark hit the like seven-figure number recently. Um, but when we started working together, he was just cranking. I think the first 2 months, like every meeting, 20K, 30K, his portfolio's up. And he was just selling puts, rinse and repeat. There would be probably like around November, it got a little bit mental. There was like some blocks where it was hard to like keep the 20, 30K weeks consistently. And you could see it went flat. But now he's like back to pushing and getting this portfolio going. But Mark has been a very consistent student. Like I think all of our meetings last 5 to 10 minutes. He's very efficient. And when we started coaching him, he was having like a new baby. So I think the baby was born in January, right?
March.
March. Okay.
Yep.
So that's obviously stressful. And this is a big deal for him. You know, as a new dad, he wants to be more valuable, have like that income he can rely on. So it's really cool to see him a year in the program, over a year, just keep trucking, keep putting this together. And yeah, was it 400K up, Mark? Is that the number?
Yep. Yep. Hopefully, I'll be reporting the same results 6 months from now. I'm confident I will, but yeah, confident. 400.
That's amazing, dude. So break down, just when you joined, what was it like to feel that consistency, put it together, and then really just like some of those stumbling blocks that we had to like learn through and what you've learned after that that you're kind of like viewing today and putting in your portfolio today to keep pushing.
Yeah, sure. Thanks for having me on, Matt. Thank you everybody for joining and listening to me. So yeah, as Matt said, or as we mentioned, around June of 2025, I joined the program. Uh, it was really the beginning of last year that I started um, kind of researching ways to take control of my professionally managed IRA with Fidelity. Um, I have an IT background, and I was very busy with work projects and things that were very time consuming. But as my priorities changed, I knew I was having a baby. I wanted to generate more income and give my wife a chance to pause work, if not permanently, at least temporarily. Um, and they also weren't beating the market returns. And after fees, they weren't beating the return. So um, I wanted to, I set out to find a way to basically take over my account full time and earn income. And just to sum it all up, after my research, I got led to Matt. Um, I guess initially I heard the cost and I was like, no way. But then I started thinking about it, 5% a month, and I was already at around 800K. And I was told previously by the folks managing my account that it'd take a couple of years. Needlessly to say, within a year, I've surpassed, uh, I've passed that. Um, so let me see some of the stumbling blocks for me. So I think what happened was,
Well, before that, can you talk about like obviously if it feels crazy to think you could do five with that amount of money, but you did it six figures like that. I mean, I can remember it was like not even a
yeah,
thought. How is it like applying this strategy? What was the feeling? Um, can you talk about like your first and second month?
Yeah, so my first and second month, honestly, they went smoother than I thought they would. Now, back then, um, we were using the Excel spreadsheets and it was very manual. And I think that actually helped me out a lot because being hands-on really, I feel like that was a good training. So starting out, I think I was nervous just because it's like, hey, it's a lot of money. Number one, that I was trading with, and then I wasn't too familiar with the leverage ETFs, and then um, I think when I got wind that, some of these riskier ones could go to zero, that really set me off. So that kind of caused a stumbling block because I was in some ones that I wouldn't be in today, like and if folks are in them, more power to you. But for me, I stay away from anything outside of pretty much T triple Q and Soxel. So the ones like Hims, I took a big loss on that. So it did take me some time to get a certain comfort level where, and I could sell puts with enough position size. And I think that's one of the things that held me back. I had the buy and hold mentality of um, in my mind, I was like, hey, I'm gonna diversify these things, right? So I know they're saying, limit the number of tickers, but I had too many tickers and I was selling position sizes that were too small. Um, so the first 2 months, I think I got away with that, so to speak. But as the market got tougher, traded sideways or we started hitting some pullbacks, the unrealized losses, if you will, started to rack up, and then I think I wasn't mentally prepared for that. So a lot of it was just getting used to looking at what was on the screen and realizing that in a lot of cases it's not real, right? In the sense that a lot of the puts, it's not like they're in the money, but they're just very red. So I think in the beginning I didn't understand that um, it's not really the truth, if you know what I mean. Like they need time to cook. Theta has to sort of have time to kick in. So now I was looking at it every day. I was hitting refresh. So that's part of how the first 2 months went. And like I said, once the markets got a little bit more tough, I think that's when I ran into problems. I did do some. Uh, I made a lot of the classic mistakes, right? Like I panicked sold. I think at the time I called it risk mitigation, but looking back, I was just like panic selling. And the second thing I was doing wrong was um, really just buying options because even though Matt always says selling puts is the way. Once I got a level of comfort with that, I was like, hey, let's try to buy some options now. And I did have some success, but it wasn't consistent enough for me to be dumping the amount of capital that I was. And so I was taking some losses there and I was panic selling those. And Jason would check in with me sometimes and I would say, hey, if I can just stop losing money buying call out, buying options, I'll be fine. And so fast forward to the end of last year, I started to get out of that phase and get more into what I had done the first couple of months and into what I'm doing now. So for me, I do very little call buying.
So what was the I guess like April, were you switching to less of that stuff in April and more diversification
No,
or more concentration?
well, part of the what happened in April was buying the call options on the triple Q. Uh,
Oh,
I still didn't perfectly follow instructions, but that did sort of bump me up a lot. But the other thing I did, like the switch, I think is what you're asking, like what changed? I drastically reduced the number of tickers that I was trading, and I focused on triple Q and SOXO, and I tried to just go in with heavier position size when the market was down. I was also looking at RSI more, and I was paying attention to VIX too, knowing that when VIX spikes, the options premiums are more frothy. So that would be kind of a green light for me to put in more. I started also, as stupid as it might sound, wasn't um, I wasn't putting in my orders to close out the puts necessarily ahead of time. So I was waiting to see that they were 50% in profit. In not in all cases, but in some cases, like I wasn't consistent with that. And so one of the things I realized is with the platform, because I'm using Fidelity, the 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 percent gain that Fidelity shows me on the screen is based on the ask, which is like the worst case, like that's the highest price you can buy to close the put. A lot of times, if I just went in and manually clicked the midpoint, hey, if I could close out at the midpoint, I would be in 50%. I will be at the 50% point. So what I say all that to say, automating, getting out of the positions helped the recycling of the cash because I was getting out faster than I would by eyeballing it and doing it manually. So yeah,
Fidelity's a scam, man. I didn't know how much Fidelity's like off the charts for collateral for like apparently the actual P&L on the screen. Like that's
yeah,
it. That's nuts. And they probably deal with like the most amount of elderly people in retirement funds too. So
yeah.
that's scary. But dude, great points. So funny with Mark is like all the mistakes I saw with Mark, like probably would have been fixed if we had guac. Like the guac today is literally like the no-brainer to just do the program and do it well. And we were trying to get into like six, seven tickers, and I think that was a mistake. I think we needed to hammer a lot more of one ticker.
Yeah.
And that's probably what you're feeling now. Um, but that was something that pretty much just the system evolved since you came in just a year ago. And we were like you said, we're doing spreadsheets. We're having everyone fill out spreadsheets, and
Yeah.
it was pretty crazy. But
Yeah.
the talk about like the feeling now today after having the system. Like, how does this align with your goals in life? How does this affect like what you're dreaming about now, what you can do? This is pretty incredible when you can make 100K in a month. Like, what does that feel like?
Well, it feels great. One of the things is, and it's kind of a common theme that I hear from others, like when you're able to do this, it reframes a lot of the landscape of your life. Like prior to doing this, I was very successful in my career as an IT professional. I felt like, I always felt like I didn't feel like I was struggling financially necessarily, but there became a point where, the time, with your family and the freedom is the biggest thing, becomes a factor. And, um, it's diminishing returns from that perspective. You make more money, but you don't make more time automatically. So it feels good to, my wife is able to stay home with our new baby. Um, I still work my IT job, but I'm fully remote, so um, I'm really kind of managing this as well in parallel. But yeah, it's an awesome feeling to be able to. I mean, right now the markets. I'm sure there's a lot of fear and to still be green overall for the month is a good feeling. Um, I don't have a lot of the panic. It's funny because I look at what's going on now. 8 months ago, I probably would have been uh, doing some bad stuff and panicking, but I'm very relaxed through all of this, knowing that what's on my screen is not. I know how to tell what's real and what's just like a temporary thing. Um, yeah, so that's all I have to say on that, I guess.
Yeah, if you guys want to drop some questions in here, we'll give them three more questions and give them some love for popping on and
Cool.
driving through this journey with us. But Mark's like so calculated. That's why I love working with Mark, and he's also so in his head too. So it's nice to see you getting like fully confident. But what was like some mental battles today that you've overcame? Like when you say the markets are down, what way are you looking at this market? Give us like a trade example. Like maybe your biggest loss, that's something you're comfortable in. Like what does that what does it mean to you? What does it look like?
Um, Let me see. I think one of my biggest losses was just being in hymns. I
Well,
think I
no,
had a
today, let's
fairly.
say today's trades, like now that you've got away from like the random crazy tickers from last year, but the stuff you're in today, like anything you see red that's like you look at differently because of the year with us.
Yeah, yeah, okay, yeah, that's a good question. Um, yeah, so take Soxol, for example. Um, I don't know what the numbers look. I think Soxol was at one, maybe it's at 140-ish or something today. But yeah, I have about three. Um, I got three positions on that right now, and all my tickers, I'm sorry, all of my strikes are down. At the I think I got one at 85, one at 105, and one's 115. But bottom line is those positions would have really alarmed me before. But when I look at the break even for many of them, sometimes I look at it like, hey, if I get assigned everything, what's my break even? So break even down at $90. To me, that's totally manageable. But all of that thought process, I think, wouldn't have been there a year ago. I would have just panicked because I mean, and depending on what chart you look at, they make the angle of the drop pretty steep. I like to use Robinhood a lot of the time just to open it up and look at the chart. Just it's just a habit, but they make the drop look extra steep. But that would have just sent me over the edge a year ago. I'm not sure if that is that the answer you're looking for.
Yeah, that's good. Have you had I guess this is the question someone asked, have you had an assignment where everything worked out and gave you the confidence to see that like from the past?
Yes. It I will say the assignment at the time probably didn't give me the confidence at the time, but now looking back in retrospect, so it's a combination of all the things. So for example, if I'm not mistaken, I think I was assigned Soxel at $37 or something, and I had a big position. I don't recall the exact percent return, but it was higher than my eyes could take. Like it was more than I thought I would ever um, make on one trade. But I think at the time maybe I just wasn't ready to receive that. But now looking back, it all makes sense. So yeah, those past experiences all give me confidence that being assigned is not the end of the world. In fact, it's a good thing as long as you're following the rule, which is um, don't
So,
open trades on something you don't want to own at the strike price you don't want to own it at.
so if you if
I think one of the challenges is sometimes that changes. It's like when you sold the put, you didn't mind owning it at that strike, but as as it seemingly things fell off a cliff, then you start changing what you become uncomfortable with what you were comfortable with. So that's a thing, right? That's kind of in the fine print, if you will. So yeah,
yeah, you gotta own that strike
yeah,
area.
you got to stick with it. Yep.
But how much would you have made if you had that assignment and you held like 500% of how much money you would have made like 6 to 500%?
Yeah,
Some,
it was. I'm pretty sure it was like a six-figure
um,
position.
so $1 million probably.
I try not to think about that, but yeah.
You and Jake have the stock sold 30 assignment pain.
Yeah. The good,
Jake,
the good,
Jake had it. Jake had it in like April, like 4 months ago. So,
the
but
good thing is that if I just don't make those mistakes moving forward, like that's like the goal. Just don't. I used to ride the motorcycle, a motorcycle, and I had to sell it. But the thing is, if you make a mistake, just don't do it again. So I
exactly.
just kind of take that thinking into this.
And your size threshold, percentage of your portfolio, what do you try to stick around?
Um, 30, I think, per ticker, 30% max, I think is what I'm trying to do right now. And then I found that about three entries, I think tends to be good for me. Three good entries. I don't know if that'll be something that's permanent, but that seems to be working. 30% position size.
And last question is and I think we can jump to the charts, is what are three changes you need to make? You know, you've kind of grown for a year and you've come to this place that's really impressive, but what are like the three things driving you now to work on, I guess?
Um, I think just the three things I think initially when I joined the program there was, at least on my end, there was far less attention to like the sweeps and the technical analysis. I think that's when it really gets good when you can pin down the entries. You can make better entries on what are already good entries. So I think I need to sort of improve on that. Um, Other than that, I think I just need to just keep doing what I'm doing. I still have a tendency to want to buy options, so I want to just keep that to a minimum. I mean, for me, 10% of my account max is good, so I just want to keep that going. Um, One other thing for me personally is because back when I started, we had, like we said, spreadsheets, and then there was Chipotle money. I'm definitely deficient in using Clock just because I was okay without it, I think. So making a transition into it, I realize I'm still missing some capabilities there because from what I've seen is very powerful. There's some secret sauce in there. I've noticed some when I pick options from there that anyway, not to get into detail, but it's like I get out quicker or something. But I don't know if that has to do with the implied volatility at the time or something like that. But so for me, um, making use of the tools, utilizing the tools a little bit better, like Guac is just one of the things I personally want to do a better job. As I scale the account higher, I'm paying close attention to my position sizing too, because that's just one of the things I tripped up on before, just being too heavy at the wrong time, or just being afraid, on the dips, which is a lot of times when I should have been going heavier, but it was just the opposite, right? As the market trending up, it was the FOMO. Let me go heavier. And then when the market would pull back, I would make position sizing smaller. So I was doing just the opposite wrong thing in a lot of cases. So I don't know. That might have been four things or three and a half. So, yeah.
Yeah, appreciate it.
Yeah.
Thanks for sharing, Mark. And I really enjoyed coaching you, and thanks for becoming a lifetime member. We're gonna have some fun over the next couple of years, and
Yeah. And,
well,
and
you'll see Mark for a long time because he's not leaving us.
yeah, and real quick, I don't want to leave this out. I would be lying if I said I could do any of this without Matt. So thank you for your help. I realized early on that Matt is, he's very talented in this, and sometimes you just have to have that special something, and that's why I chose him, to take this journey with. So yeah, I appreciate that, Matt, all your support, and happy to stick around, man. Thank you.
Thanks, buddy.
Yeah.
Appreciate the kind words. You give Mark some love in the chat, guys.
Thank you,
We'll
everybody.
we'll be seeing him hopefully celebrate his seven-figure award in 4 to 8 months. So be ready for that. Um, can't wait for it. And I'm going to jump here to the markets, wrap it up, go through questions.